afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And just one day left for ET now to celebrate its 14th birthday, and we have a lot lined up for you tomorrow as well as today and through the course of the week. And remember, viewers, you can also win your chance to win gold vouchers. You need to watch ET now for that. But let me take you through what the markets are doing at this point in time. Very subdued trading session coming in for the benchmark indices. We started on the negative footing, saw a good recovery. Right now we are in the negative territory for the benchmark indices. Nifty is below that 18,750 mark. Let's talk about what the rest of the market are doing, especially the broader markets, because they were outperforming the benchmark indices right from the word go. You had both mid cap and the small cap index in the positive territory, which they are holding on to at this point in time. Is the Nifty bank that's playing spoil sport in today's trading session? 0.7% downtick coming in for the Nifty bank. Advanced decline ratio is pretty much neck to neck. 1:1 is the advanced decline ratio right now. Talking about the sectoral losers and gainers right at this point in time, you have PSU Bank Index as the top sectoral loser, almost 1% downtick coming in for PSU Bank Index. IT Index also under pressure of late. Realty Index is holding on to losses, but it's basically flat with a negative bias. Talking of the list of gainers, then it is the pharma, auto, FMCG, all of them that are actually bucking overall market weakness. The pharma index being the top gainer on the sectoral front. So that's the way how the markets are looking like. Vinny, once again, we thought we are going to go towards that record high levels, but that's not the way how it's transpired. 2 hours left for trading session.
Absolutely. So Nifty down almost 0.1%, while the Sensex is down almost 0.2% as of now as well. Nothing much of an excitement there, but let's get started with all those stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. On the technicals, we are joined by Kunal Bothra, while from the research team we have Amakshi as well as Ashesha joining with us. A very good afternoon to all three of you all as well, and Cheryl as well as always. A very good afternoon to you as well. And I'm going to be starting with the first stock, and that is Interglobe Aviation. Let's put the spotlight on that one because we have a brokerage note that is coming from Morgan Stanley. They're maintaining an overweight rating on Interglobe Aviation, and they've given a target price of around 3,126 rupees per share, which is obviously a considerable up move in terms of from the current market price of 2,400 as well. All the key earnings are drivers are moving favorably, is the word coming in from Morgan Stanley on Interglobe Aviation. They believe the near-term profit per seat could hit a cyclical high as well, and on the normalized earnings and median multiple also they see a 33% upside coming in there as well. So they're quite positive on Interglobe Aviation, and that is why that overweight rating is coming in, because they expect the up move to start for Indigo and improvement in terms of their per seat profits in the near term as well, and that is why we're seeing that stock is buzzing with gains of almost more than 2% in trade.
All right, moving on, let's put the spotlight on V-Mart in today's trading session. Remember, yesterday you had slew of block deals and big marquee names entering all of those counters. So let me first start talking about V-Mart to you. That particular counter at one point in time was trading higher by approximately 4%, reaching highest in over a month. Foreign portfolio investor Amansa Holdings bought additional 3.37 lakh shares, which aggregates to over 1.7% stake in V-Mart, and this at an average price of 1,990 rupees per share. Amansa Holdings actually held 6.83% stake in V-Mart as of March 31st, and now you can see the fact that he's gone ahead and added more 1.7% stake in V-Mart. So on back of that particular development, you can see the stock that's still holding on to good strong gains of about 2% as we speak.
Okay, let's move on and talk about Kunal's first stock, and Kunal, that is L&T Housing Finance. What are you looking at in terms of the charts indication that that you are picking up in terms of any trends from there? Should we start expecting an up move here?
Up move for L&T Finance already over the last many days. Today specifically, the stock is up some 5 to 6%. It's retraced mildly from the intraday highs, but then no complaints, because the stock over the last 2 weeks have been showing very gradual kind of an upward move from 102 levels to 120 plus mark in a matter of 2 weeks, where the stock took almost 2 months to climb from 80 to 100. So that itself tells you the change of behavior as well as the momentum which is getting a bit more aggressive for L&T Finance. I think the chart patterns as well as today's setup indicates that this may not just be a topping out formation for L&T Finance, but this could actually be a starting move for the stock price and possibly a start of a quarter multi-year rally for L&T Finance. So I would be extremely bullish on the stock, and I would still believe that a buy and dip strategy from current levels should be something which needs to be the approach for the stock. Would look out for targets of at least 140 to 160 for L&T Finance in the next 3 to 6 months.
All right, moving on then, HEG, Vamakshi, why is this stock in focus in today's trading session?
Cheryl, this stock is in focus on the back of a brokerage note that came in from InCred, and as you can see on your screens, the stock has only picked up momentum as the day progressed. The stock is trading almost 7% higher as of now. Let's look at that note that came in from InCred. They've initiated coverage on this stock with an ad rating. They've given a target price of 2,462 per share, and here's what they're seeing. A decline in US steel inventory and new EAFs could provide some growth visibility. Global decarbonization trends are also in the favor of the company. The company could benefit from that as well, and there are some significant entry barriers, so which will enable the company in order to protect its margins. So largely, all in all, it looks like a positive set of factors coming in for HEG. InCred has initiated coverage with an ad rating. They've given a thumbs up, given a target price of 2,462 per share, and that is the reason the stock is surging in trade today, 7% higher as we speak.
7% higher as we speak, and almost near the day's highest point as well again. Let's move on and talk about Axis Bank, Ashesha. Why is this stock in focus today? What's the news flow?
Yes, the stock is in focus in the back of a block deal that took place today morning. In fact, about 0.6% equity changed hands. 5.63 million shares have traded today morning, and Bain Capital is the most likely seller to this particular block deal. They held about 1.3% stake as on 31st of March, and now looks like they've sold that 0.6% stake out of the total 1.3% that they held. So on account of this, we saw that sharp downtick at the start of the trading session. The stock, however, is recovered now as we speak.
All right, moving on then, Kunal, let's talk about Reliance Industry, and the big question is, when will Reliance Industries participate? When will it take the markets to those record high levels?
Well, I think it's already started off, Vinny, over the last couple of days. The stock has moved up from 24.70-75, which was the low, towards now 55.60 mark. So almost like a 90-point jump for Reliance Industries in the last 3 days. Now, more interestingly, the stock is at a 5-month high, which means that it's not just the price momentum which has come back, but it's a breakout which has come back for Reliance Industries. The volumes in the last 2 days, specifically on the cash side for Reliance Industries, has been quite decent, and there have been many confirmation from indicators which could probably indicate that the stock is replicating something in the historical charts which came back in 2017 and 2020, when the stock ended a phase of a major correction and started off a new bull trend for itself. So I think Reliance is at the cusp of such a kind of a breakout, and that's why I would believe that this could be a classic level to buy the stock for a medium term time frame. Would look out for the stock hitting back towards the life high levels in that kind of a time frame. So I think traders who have 6-month plus to 9-month plus kind of a time frame should look to buy Reliance Industries at current zone.
Okay, look at those levels for Reliance Industries. But let's move on, talk about Dalmia Bharat. This one is in focus on the back of a brokerage note that came in from Jefferies. They're maintaining a buy on Dalmia Bharat with a target price of 2,490 rupees per share. So the previous target price was 2,400 rupees. So slight increase in terms of target price by 90 rupees for Dalmia Bharat by Jefferies. Now, what they expect is that third year for strong 7 to 9% industry growth in FY24. With a drop in energy cost, industry margins are actually set to start seeing an improvement, which will work out well for Dalmia Bharat. And in terms of capacity target also that Dalmia has, in terms of that is 47, 75 and 110 to 130 by FY24, 27 and 31 respectively. So a good target in terms of capacity as well. And overall, the target to keep the net debt EBITDA at below or equal to 2 times is the main factor that is coming into play for Dalmia Bharat, and that is why Jefferies is maintaining a buy on this one. And we're seeing that the stock is buzzing in trade, picked up momentum through the day and up almost 2% in trade as of now.
All right, moving on then, and let's put the spotlight on the hospital space in particular. We will talk about Fortis Healthcare, Max Health, as well as Global Health. All of these counters are in focus in today's trading session. And why is that? Because you have JP Morgan, which has come out with an initiation note on the hospital space, where they are saying that the hospital sector has outperformed the healthcare as well as Nifty in the past 3 years, driven by structural demand and prudent cost management and capex discipline. On back of that, they have decided to go ahead and initiate coverage on Fortis Healthcare with an overweight stance, with a target price of around 355 rupees per share, which suggests about 21% potential upside for that particular counter. They are expecting a revenue as well as EBITDA CAGRs of 13% and 17% respectively over FY23 to 26. This is driven by a focus on profitable growth and bed expansion. Also, they are saying the risks will include inability to improve the margins and delay in bed expansion. On global health, what JP Morgan is saying that they initiated coverage with a neutral rating with a target of 710 rupees per share with a 9% upside potential. They are saying that they are basically saying that the strategy of expanding beds in markets that are underdeserved is paying off well, as demonstrated in performance of neo units in Lucknow and Patna. While for Max Health, initiated coverage with a neutral rating. The target they have set is 620 rupees per share. The potential upside for Max Health is relatively less than Fortis as well as Global Health, and that's one of the reasons why you can see Max Health is subdued in today's trading session.
Okay. Moving on and talking about Cholamandalam Finance then, and Kunal, what would we expect in terms of targets for this one? Has started seeing a bit of an up move in the last 6 months for sure. Is that here to stay, the momentum?
This is I think a lifetime breakout or a life high breakout for Chola Finance. The stock has done reasonably well over this quarter, so far over the last 2.5 odd months. Now, I think more importantly, this earmarks an end of almost a 4 to 5 straight quarter of correction consolidation for Chola Finance. So this augurs quite well, indicative that this could be a start of a new uptrend for the stock. We've seen historically that the stock has this tendency of going through at least 1 to 3 quarters of consecutive uptrend before it hits back into a zone of consolidation. So we are expecting that the stock is showing signs of a similar kind of an uptrend, which could last for at least another couple of quarters, which means potentially the stock from current levels of 1100 could rise up to even levels of at least 20 to 30% higher from current levels.
All right, moving on. Vamakshi, you have electric bus makers in focus as JBM Auto as well as Electra Green. What's the news pair?
Both these counters are definitely in focus, but important to note that both these counters have touched their all-time high on an intraday basis. Now let's look at what is the news flow surrounding this counter. Reports are suggesting that the Union Cabinet is likely to approve a few schemes today, and one of them includes the city bus augmentation scheme, which is worth almost 62 to 63,000 crores, and this scheme is expected to boost public transport in 169 cities. Now this augmentation scheme was announced by the government back in budget 2021-22, and this scheme would actually facilitate deployment of innovative PPP models to enable private sector players finance, acquire, operate as well as maintain these buses in the country. Now this augmentation scheme also aims to provide support for new buses of all fuel types. So largely this is a very positive trigger coming in for JBM Auto as well as Electra Green Tech, and that is the reason why both these counters are up and away in trade today. In fact, when we look at all these companies on a year-to-date basis, they've also gained quite well. So largely that is the news flow surrounding both these counters, and definitely you should watch out for them.
Surely keeping an eye out of this one. Moving on to stock number 11 for today, and we have Godrej Properties, Ashesha. Why have you picked out this one? What is the news for you?
Well, yes, Godrej Properties is sitting with an uptick of nearly 4.5%. This after they informed the exchanges that they are all set to buy 7.4-acre land parcel in Kolkata to build housing project, which has a sales potential of nearly 1,200 crores. This is for a luxury housing project, and the company said that the project will have a developable potential of approximately 9.8 lakh square feet with a revenue potential of about 1,200 crores. On the back of this news, the stock is buzzing in trade today. In fact, it is holding up with gains of nearly 4.5%.
Right, moving on, let's talk about Maruti Suzuki, Kunal. At one point in time, you did say 10,000, and that is not too far ago that you said it. Actually, I think earlier this week or last week is when you said the Maruti is expected to reach that 10,000 mark. But when? So
yeah, the question is when, but the question is, the path for Maruti in the last 2-3 months has been very, very strong. So we've not seen this kind of a 15% kind of an upward move for Maruti from levels of 8,000, 8,100, where the stock was trading just about a couple of months back. Now, the important part is, which I highlighted even in the chart busters yesterday, that the stock is coming at a major trendline support. So at that 9,500 mark on the spot levels, the stock was at a cusp of a major support or a retracement in terms of trend line, and the risk reward. And in fact, whenever we've seen historically that the stock has taken support this trend line, it's managed to break past above the previous swing highs and gained by a margin of 3 to 5%. So if we try and do the math even this time around, 9,750 was the previous high for Maruti, and if we expect at least another 3 to 5% upside from the stock beyond those previous swing highs, we could be looking at 10,000 plus targets for Maruti.
Keeping an eye out on Maruti reaching 10,000. Close eye on that one. But let's move on and talk about Wealth Fund India. This one is in focus on the back of a bulk deal we saw happening last evening, where Infinity Holdings actually sold around 95 lakh shares in the company at a price of around 93.6 rupees per share. Now, in terms of obviously who was the buyer was Society General, which bought around 50 lakh shares in the company. So keeping an eye out on this one on the back of a bulk deal. As of now, what you're seeing in terms of the stock price, that's a 7-day move that we're seeing coming in. It's down 5% in trade. As of now, it's absolutely flat, given up all those gains on intraday basis as well. So let's keep an eye out on this one. But on the back of a bulk deal, we're seeing Wealth Fund India that has been in focus.
Alright, let's shift focus to another candidate that is buzzing on back of a bulk deal, and that is Orient Pro. Remember, like I mentioned earlier also, yesterday we had a lot of companies, we saw a lot of marquee investors enter these counters, and Orient Pro is one of them. As you can see, Orient Pro right now is locked in the upper circuit of about 5%, but it is actually hit a record high level as well. Malabar India Fund has bought about 2.63 lakh shares of the company in the bulk deal. This is as per the exchange data, and if you look at the stock price movement, it is on track for a fourth consecutive session of gains, and the stock is trading higher by above its 50, 100 and 200 day exponential moving averages since April 26th. But Orient Pro on your screen, locked in upper circuit of 5% at record high levels on back of that buy coming in from Malabar India Fund.
Let's move on and talk about Paytm on the charts, Kunal. When you look at it, obviously in the last 1 week, 15% returns. Last 1 month, 24% returns. This new age tech name featuring on your list, what are you finding attractive? Still a right time to pick this one?
I think the stock has confirmed a breakout on multiple time frame charts. Specifically, the stock retracing. So I think the all-time high levels for Paytm was around 1955, so approximately 2000. Went down to as much as 430, 440 levels, and now it's come back, giving return of almost 100% from the previous lows of 440 approximately, which means that the stock has retraced quite smartly from the all-time high levels, and that is a very strong retracement for a stock like Paytm. 2 consecutive months of price action, weeks of price action, and the stock has already confirmed a breakout on the short-term charts as well. So would suggest a buy on Paytm. I think dips should be used as a good averaging opportunity, and would not be surprised that the stock possibly heads towards even the 4-digit mark, which is 1000 plus over the medium to long term.
All right, let's just mark the flashes on the bottom of the screen, because you're just getting the news that SAT has deferred Zee Entertainment's appeal against the SEBI order for a Monday. They've said that the notices were sent to SEBI for their reply. However, no order has been passed, because SAT is going to hear the case next on Monday. Remember, the NCLT is set to hear the application of Zee-Sony merger, that is tomorrow on June 16th. And also what SAT is saying, that we permit the applicant to move adjournment application at NCLT. So for now, what SAT has done, they've deferred the Zee appeal, the Subhash Chandra as well as Puneet Goenka's appeal against SEBI order for Monday. And what they've said, that they have sent the notices to SEBI for their reply. They've also said that they're permitting the applicants to move adjournment application at NCLT, because tomorrow NCLT will be hearing the application on Zee and Sony merger. So that's an important development coming in on that particular case. For now, SAT has deferred the appeal that was filed by Subhash Chandra as well as Puneet Goenka against the SEBI order for June 19th, that is Monday.
Okay, so surely keeping an eye out on Z Entertainment, and obviously Monday is also the day that we'll be keeping an eye out on for further update on that.
Actually, we should watch out for
Tomorrow as
also.
well. Tomorrow as well as Monday is both the dates that we're keeping an eye out on. But moving on, Vamakshi Bharat Dynamics, this one in focus. Why?
Well, Vinny, this stock is in focus on the back of a brokerage note that came in from ICICI Securities, and they have highlighted that they did host the management for a meeting with investors, and here are some of the important takeaways. Orders that are pertaining to several defense programs are expected to come in post FY25, and revenue growth so far has remained quite elusive, but they see several bright spots for the company as significant order inflow is expected to come in from FY25, like I just mentioned. Besides, when we look at the export component of Bharat Dynamics, it accounts for nearly 10% of the order book, and this in fact is the highest amongst some of the defense PSU names as well. The strong order book provides the company ample opportunity in order to diversify its earnings base as well. Now, what ICICI Security is expecting is that the revenue pickup is likely to come in from FY26 onwards, and not just that, they're expecting the FY27 revenues to be almost double the FY24 levels. They perceive Bharat Dynamics as an interesting, or a rather attractive investment opportunity for the medium term, and on the back of that, they maintain a buy and also increase their target price from 1,175 to around 1,325 per share, and that was it for Bharat Dynamics. The stock, as you can see, is trading higher by almost 2.5%.
Alright, that is Bharat Dynamics for you, but another new age stock making onto Kunal's list, and that is PB Fintech. How are the charts looking for this one, Kunal? And do you think that after Zomato, now you are going to see some more activity in these new age counters, and all of them are looking attractive?
Yes, it seems like, because money seems to be chasing these stocks, and momentum as well as the volumes are looking very strong. Now, the reason for flagging off PB Fintech is because today the stock has confirmed a breakout of a bullish flag pattern, and it's been spread across the last, I think, 8 to 9 weeks, so approximately 3 months from the February lows for PB Fintech. And I think after multi-week of consolidation, today the stock has confirmed a breakout. The volumes over the last couple of days was also very attractive for the stock, which means that this could possibly be a start where many of these new age stocks can get into a strong uptrend. And when momentum breakout generally tends to get confirmed, we expect the stock to move into a higher range of support as well as resistances. So expecting the same for PB Fintech, and expecting the stock to head towards 685 to 705 mark over the next few trading sessions.
Okay. Keep an eye out on those levels for PB Fintech in the near term as well. Let's move on and talk about HAL, Ashesha. Why is this one in focus?
Yes, defense counters have been in focus for the last many trading sessions. Today, of course, in particular, HAL is in focus, and that is because US and India are negotiating agreement intensively for transfer of sensitive technologies. In fact, reports also suggest that General Electric and Hindustan Aeronautics, or HAL, will co-manufacture jet engines in India. So on the back of these agreements that could possibly be entered into, both of HAL is in focus today.
Alright, that is HAL for you, that is in focus, but let's shift focus and let's talk about Zomato, because why should only Kunal take up?
I was just going to say that, why is only Kunal picking up all those names? I think you should also get to pick up Zomato.
So therefore, Zomato, since it's lunchtime, definitely Zomato has to feature on our list, isn't it, Vinny? But let's talk about why Zomato featuring on the list, because JM Financial has come up with a note where they're maintaining a buy stance on Zomato with a target price of 105 rupees per share, which definitely indicates a substantial upside from where Zomato is trading right now. That's the target coming in from JM Financial. They believe that Indian food aggregators, which include Zomato as well as Swiggy, can grow as much as 1.5 times the average pace of the industry in the foreseeable future due to the lack of any new competition. What JM Financial is saying, that they believe that both the incumbent aggregators are becoming indispensable to the ecosystem. They're saying the food delivery platforms contribute more than 30% on average to the sales of the restaurants. This is a survey that they had conducted, as in JM Financial had conducted. They are also saying the awareness about ONDC is aimed at attracting, restaurants remains low. Therefore, Zomato remains JM Financial's top food delivery stock due to its market dominance and trends in profitability. So that's the word coming in from JM Financial, maintaining a buy stance on the company with a target of 105 rupees per share.
Absolutely, that's most of the new age stocks that we've covered today in the first hour of this segment. But we're going to slip into a very short break, and as we go into the break, we spoke to Rahul Chadha, who is the Chief Investment Officer at Merani Asset Investments, and he also said he continues to like select names in the auto space and believes that Zomato and Paytm will actually bounce back too. Let's go across and listen into his views.
Kind of an put them together as autos, but each of these companies specializes in its own segment. And what we've seen is demand being dominant, particularly for two-wheelers for last couple of years. So that's kind of a coming back. And last year's was this trend of SUVs. It continues to be this year with the end of this chip shortages, etc. So we continue to like names like M&M, Tata Motors, Eicher Motors, etc. And I think these names are still fairly valued compared to some of the other mid caps, which are up 20-30%.
So you have exposure to a lot of auto names, but you also have exposure to the entire new age tech names, the likes of Zomato as well as Nykaa. Are you looking at expanding your portfolio there, deepening your presence?
Look, again, we're happy with what we have over there. Zomato is a name we've liked for a while, and there were good entry points where we increased the exposure over there. I think things are still a bit slow, but look, these names have done a great job in terms of, particularly for Zomato, in terms of gaining market share, and as and when the demand recovery happens, we expect them to bounce back strongly.
What's the contra play in this market, or is there any?
Contra plays would be something like pharma names. What one is picking up from ground, particularly in the US, is that look, there's a bit of a tightness in this pharmaceutical market. The pricing has improved considerably for these generic pharmaceutical drugs as some of these companies withdrew or move out of the market. So I think that is a space which has not done much for last 2-3 years. We've continued to like hospitals over pharma, but this may be